Welcome, my name is Mike Hamilton from Trade the Easy Way, and I'm just looking at the week ahead. Fairly busy week. We have tomorrow on the data front, we have, we actually had core retail sales today, is that right? Yeah, we've had US retail sales today, which have been uh, up from 0.6 to 1.1%. Month on month, we are slightly down. Okay. UK jobs tomorrow, and what else have we got? Weekly jobs in the US. Oh, it's not that busy. UK retail sales on Friday. So let's have a look. We have a couple of things I've been doing. I'll talk to you about what I'm doing. On the 1st of April, came down to 560 and then popped up to 39,000 and then dropped 1,000. I think if we 650 up there is a decent resistance area. Any pullback to these resistance areas is to be sold into. Um, and today we've seen 370 and we're down 350 pips, trying to hold here. This 37,780 is last year's high. We saw a big push up here on 19th of Jan from 37,420. So it would make sense to come and reconnect with this January level. Let's assume for now that we're going to continue lower. But any highs into that 38 and a half, if we see that this week, then I think that could take us down to the January support. Ultimately, so far at the moment, we've had three-wave corrective wave. We've had a 1, 2, 3 wave after these 1, 2, 3, 4, 5, 1, 2. Yeah, so you could argue we've done a 1, 2, 3, 4, 5. Anyway, let's. I think the main point is the highs are still these highs are selling. These interim highs are also selling. Just a question of whether we're going to continue lower, which at the moment seems obvious, or if we are going to pick up around here and get some sort of push back up into resistance. I think that whenever you're under the 50-day average, start shorting highs is my recommendation. So let's see what we can do with that. Let's look at the FTSE. A pretty mediocre reaction to the what we've had at the weekend. Obviously, a lot of warring in the Middle East with Iran firing missiles at Israel, and the market's reaction to this has been relatively calm. It's as if it's already priced in, but that's another reason for shorting highs. This FTSE is, oh, look at this, we're under the 50-day average here. With the Dow, we're under it. The FTSE is still above it. So we could come all the way down to 7,800 and still be the right side of this 50-day average. So this is a potentially, if the markets are weak and are going to sell, then sell into this resistance up here. Let's see what happens after jobs tomorrow. But on the face of it, with these lower closes here, it looks as if this needs a pullback as well. Let's switch to the pound. Now, dollar has been very strong. So we hit the underside of this trend line and we're dipping right back. Um, if we if tomorrow we're holding 125, then I think this could recover. In the meantime, keep selling highs, and we've seen a high of 125 today. So if we break this low, we could easily come down to 132 and lower, all the way down to 122. This is on the 50-day average, so any pullbacks are worth selling. Could look at pound yen. Stay with the pound for now, because this I've been talking. You can see how I've drawn this up. Last Friday we hit this trend line and we bounced. So from a low, so we're a couple of hundred pips plus up off. I think this has still got some room to go. And if we can hold this 50, if we can hold these lows and break this high, I think we could be coming up to potentially 200. A lot of resistance. And the trick is that the most basic rule out there for technical trading is to buy any dips back if you're above the 50-day average and sell any highs when you touch the 50-day average. So that 50-day average is your line in the sand. Anybody who loves moving averages will use the 50-day average as line in the sand. At the moment, this pound yen is above it and sitting up there quite happily. Right, gold. It's consolidating here. I think any pullback to 2250, 2240, 2250, if we see that back to this area here, I think that's viable. In the meantime, it's sitting up very well. So if we struggle here, so we've got a big red bar up here. If we can't get back above this 23.6 and back into these highs, then I think this could pull all the way back to 22.40 at least on the gold. Silver, silver looks as if it's holding here and go and find 30. We've got a lot of volume coming in today, so that dip on Fridays appears to have been bought and we're holding up very well. Wheat, we're in this holding zone, so as long as we don't close under close under 550, I think we're going to start to hopefully build from here and crack up to $6 plus. Close under 550, and then this could all fall right back to the $5 or lower. Let's move on to didn't talk about oil, did we? So oil has been pulling back even after the weekend with warring in the Middle East. This still looks as if we could be heading for 83. So obviously not, we're making lower closes with a fall off in volume. So that looks as if it needs a decent pullback to about 82.50, maybe lower. The big breakup area was 81.50. So if this doesn't hold here, we could come all the way back to 80, 81.50. Okay, we are disconnected from the 50-day average. The 50-day average would take us under 81 at these current levels. Hi, Patrick. It's all been recording. So I think with the oil, I'll be patient and try and get hold of 80, 82.50, 83. because if we pull back to that area and the volume kicks in, then I think this can get going. But given what kind of if this can close lower after a weekend like the one we've had, then it doesn't bode well short term for strength in oil. Right. Any commodities you want me to look at before I move on to stocks? Let's just take a very quick look at OJ's picking up again. Natural gas. Yeah. This is behaving as I would expect. So we've 2050 got hit on Wednesday. Now we're pulling right back. So getting very interested in gas. If we can come down to 1750 mark, let's update this chart. So we didn't get this big push up here from March, which cyclically is normal. So we're struggling with 2050. Let's mark that up. This is a good way to mark your charts up. So that is a big barrier to natural gas. So that's the big demand line, and this is the supply line. All the way down there at 1735. So if we are going to shuffle around in this area here, but end up coming into 1690 or 1730, then I would start buying. But normally, natural gas picks up about April, May, normally. Right. So enough. The high grade copper. Talked about this a lot. You know, it's a new oil basically. But that's what some people are calling it anyway. So we're back above 23 highs. We're up there, last up there, January 23. Any pullbacks to 42, 43 are now buyable with a potential for that to go to 45 plus. Pity the wheat's not doing that. What else? I think that's enough commodities for now. So if gold pulls back, that's a goer. Right, let's have a look at. We're chattering about Rolls-Royce, so let's have a look at Rolls-Royce. Yeah, so 370 looks like the pullback area. That will be a reconnect with a 50-day average. If it starts to close higher here, you may have to pay £4 if you want to get in, that is. Otherwise, hold on. If you're patient, you might see 370, 372. Pan-African is sitting up after that push up on Friday. I still think that can get to 26, possibly 30. This is one to watch. This had a big burst up on Friday, IQE. We haven't talked about this for quite a while. We used to track this and I stopped tracking it. It's too far gone at the moment. That is too high now. So we had started to perk up in early April, down there at 17, 18, and now we're 32 nearly. Any pullback on that one? So I'd be patient. I wouldn't chase it. I'd be very patient and see if that can pull right back into support. And support being the 20 mark. May not get there, but worth a look. Pfizer has dipped right back into December 23 lows. So still keeping my eyes on that one. BT. Wow. It just won't do it, will it? Maybe I'm wrong about BT. Maybe it's just going to head back to the pound mark. Well, we're only 105 now. Does not look well. The volumes are slack. The amount of red we got on this daily chart is not healthy. So I will close my position off if we start to close under these levels here. I'm not leveraged, so I might give this a little bit more time. I might carry a little bit of heat if that gets down close to the pound mark. I'll start to buy more if it comes down to the pound and starts to hold up on volume. But we're still sitting, we had a big volume day on the 26th. We had a big push up on the 21st of March. So I think let me tidy this chart up a bit. Let's put a zone in there again. So the demand, so we've hit the supply zone up there at 110, 111. So the demand, the support is down there at 103. Start closing under that, and we could go down to a pound or lower. Right. Let's look at Barclays. Let's look at the bellwether of the UK banks. So this is Lloyd's, still holding up the 50 mark. Barclays, right? So Barclays hit the 194, 195. If that pops back above 183, then that's a buy with the potential for 216. In the meantime, be patient and stay out and look for lower support. Right, anything else you want to look at? Let me just refer back to my list. Let's look at the oil. I'm very quiet today. Let's look at the oil, guys. Let's look at BP. Well, this has had a big move from 437. 495. If we pull back to 495, let's tie this all up. So it's in quite a big channel, quite a big box. There's the box. So we're in this big 437 to 550 box. So if this is a lower high here, and we start closing underneath this, then I can see this getting close to the bottom of this, but I can see this come down to 450 again. So I will be, again, I'm using the word patient a lot today, but I would say keep an eye on this one. Yeah, I'll go through all quickly again. I've looked at it, but I'll go through it again quickly in a minute. I'm still looking for oil to come down lower. Where are we now? Oh, right. I have been buying dips in oil. I've had two moves in oil. In fact, where's my picture? Thought I had a screenshot of oil. Hang on. I know where it is. Yes, I grabbed oil under the 84 mark. I took it off for this 84.60 for a few hundred quid. And then I got back in. when it dropped back to 84, I got back in. So yeah, I would steer clear of this for now. Look at this. Prudential is just looking, just won't do it. Buyers are, these big bellwethers. This is what direct line. Yeah, I would love, if direct line came down to 170, I would buy it. It's sitting up, it's at the major resistance here. But if we came down to this supply zone, I would be a buyer of that direct line. In the meantime, steer clear. I'm steering clear. Um, okay. What else am I going to look at? Let's look at the commodity market. Rio is still climbing higher. Any pullback to 50.50. That's had a good little run on Rio. Man Group, it's had a great run as well. Elementis talked about this for over many months. A bit of it's very slow burn, but that's up from 97 to, well, it was 150. Big pullbacks. If that comes down to 125, 130, that's a buy. Um, Wanted to look at this one. Tell you what, I'm just going to get Centrica's pulling up. I think Centrica's a buy at 128, 125, 128. Right, this is the one I was going to look at because I got distracted. GENEL. Yeah, keep an eye on this one. The ex-BP chair was involved with this. I'm not sure if he still is. I need to check. Um, yeah, you can see 192 is a big area of resistance. It's an oil pipeline company. I think there's a golden opportunity if that can come down to 75 or lower. I'll leave it for now, but I think that's a good opportunity. Right, you're very quiet today, so let's have a look at a couple of US stocks. This is Applied Materials. I would steer clear for the moment. I've not had a look at Apple for a while. Let's have a look at Apple. Right, so this 168 was a good support area. That's pushing up from there on volume. We had earnings from Goldman Sachs. Goldman Sachs beat earnings today. So they're just holding support at the moment. So 3,750. All the support back from early Feb is a potential buyer for that one. Right, I'm going to leave it there. So it's a precarious time at the moment. The miners are holding up. Yeah, I mean, you've got things like miners have had a good run. The banks have had a good run. Healthcare is low and sideways, definitely. Yeah, commodities, well, oil's volatile. Copper is running well. Some of the commodities are doing very well. Unfortunately, at the moment, wheat is still dragging its feet. The grains are still dragging their feet, but I'm hanging on in there. Obviously, things like retail and housing is weak. Um, Energy has been good. Hence the reason why I was talking about a pullback in Shell. Tullow has had a good run. Talks about Tullow. So yeah, I mean, so if you're in the right sector, if you're in um, some of the techs and the energy and the miners have done well. A lot of other sectors are, as you say, of coming off the top. Um, and struggling. Wow, the oil is catching a bid here and doing well on the oil. Yeah. So with any market, it's always about being in, it's nearly always about being in the right sector. And the sector cycles are linked with the economic cycles. Commodities tend to be more linked to annual cycles, and you need significant shifts in the dollar or fundamentals to get them to move one way faster, one way or the other. Um, Otherwise, it's all about where we are in the economic cycle, and we are, as you can see from the indices, we're topping out. This big run. Let's go back to the um, hang on a second. Let me just get my main markets up. There we go. Dollar's cracked. Sorry, the Dow's cracked. Broken support now. So we're already touching with, as we speak, we are touching last year's highs as we speak. Oil's just had a bit of a spike push higher. So obviously it's a very sensitive period at the moment so we pulled right back into this big bar from the 2nd of April at the moment we're holding. So 83.50, 83.60's got bought so far. Um, Euro US. So we had ECB last week. Yeah, I absolutely agree. This is the, the last year's breakup in November came from, well, 105. So I still think this is lower at this stage. I'll tell you what, I mean, if the dollar really catches a bid, and it's getting very much bid at the moment, um, I could so easily see that coming down to the 23 lows again. We've broken a key structure here. So we reached 50% up there in 9th of April. So Elliott wave wise, if I just get my pen, I'll tell you what, let's do it on this chart. So we had this so we kicked off with a big move down in February. So one, two, a short three wave, an even shorter pullback, and now we are deeper. So here back on this three, let's go back a bit. Up until this point here, I'll just zone it. Hang on, what's the best way of zoning this? Up until, where's my arrow? I'll do it with a pen. It's quicker. So this is a three-wave correction. So we had a very big move up here into December, January, which got sold into. Then we had a three-wave correction. Um, but after the correction, the initial leg just got sold into. So had we continued and held above here, I would have said this is going higher, back up, and potentially way up to 113. So the fact that we had a very shallow leg up here and couldn't close above the 50% was a clear warning sign that this was not going to hold. So unless we get a significant close above this 106 on with a higher buying volume, I think this could easily come down to 104. You know what? It could easily come down to 102. Um, the autumnal support was down there at 105. So I think next stage is 105 because there appears to be no volumes, no support here at the moment. It is a support level, but the markets are not giving it support. No evidence of any support here. So I think this is shortable at these highs down to 105. And I can, at the moment, I can see this euro just coming off, just coming lower, but and not picking up till the second half of the year. That's my take on this at the moment. Once having broken, came under this is a key trend line, came under it, went back above it, immediately closed underneath it again, immediately with on volume. So if we stay under this trend line, then the highs are still to get shorted unless you get a significant pickup in volume and higher closes as we did get in mid-Feb. But for me, this is still shortable. Um, all right. Anything else you want me to look at? If you're trading Forex, I think the one thing, as a mate of mine who loves the pound yen, American guy, actually he's in Guatemala. He sits on a coffee plantation in Guatemala. He is American, but he's um, and he's been buying dips in this pound yen. Um, and so keeps making, so had a big push up at the start of the year, pull back, run, pull back, run. And we're pulling back again. We're just come in contact with the 50-day average. And this is still getting bought. So if we break those highs, we could go back to 198 to 200 because the volumes are picking up here. So at the moment, this is still doable. If you disagree, by all means say that's fine. Otherwise, so gold has had a good day today. I'm going to finish up now. You know what? Cash is a position, and there is no harm in just staying in cash. You do not have to be in a position. Okay, so we've got gold, these shallow pullbacks. We've seen about 23.25 today, and we're getting close to 23.70. Wow. The oil is looking like we're going to touch 85. Very volatile. I mean, yeah, obviously this gold kicked off in Feb, and the pullbacks have been very shallow. So it is, yeah, I agree. it has been difficult, which is why unless you've got the oil down here in the early part of the year, this one was difficult. So we saw a nice move up in March, nice buy signal end of March, and now this appears to be wanting to go higher. Um, See if we can get to 83.75. If this oil closes well today, well, the oil's just about it's coming to the end of the oil session now, or the main oil session. If we close up here, I can see oil coming back down to 83.50, 83.60. Um, and if that were to hold, I can see it's going back. I can see it's going through to 88.90, back up to this October highs. Who knows? Could if it really catches a bid, it could go back to 95 soon. Cyclically, the best period to buy oil is normally early Jan or mid Jan, early Feb. Um, and it normally keeps going until June, July. So this peaked in October. So if you look at last year's cycle, now this was a more unusual cycle last year. Um, so last year we took ages. So we've got to move up from April, move up in May. We went sideways right into late summer. Now that's unusual. That is unusual. Normally the oil does this at this time, but it didn't. It didn't do it until very late summer and early autumn. But that normally happens between February and June. It was just a whole instead of February, June, it did it July, October. So if you look at that pattern and then move that across, um, and this leads you on to, so we pushed up to 50%, pulled back into support. So we were basing here, then ran into trouble at 93, pulled back, did a run, and now just at the moment we're pulling back. The 50-day average is coming underneath us. Um, so I think stick to oil for the moment. See if you can pick up something like 83.50 tomorrow in the oil. Get your stop under 82.50. Get your stop under here and see if that can go back to these highs and break. And keep your order out there because we've got invents coming in a couple of days. Invents might drag this back, but yeah, otherwise, let's have a look at the pound again. Yeah, pound's very similar to euro, isn't it? We dropped into this support, but it's still not showing willing. Let's get so you've got oil. Okay, what sort of price were you getting into oil? Anyway, keep your eyes on it. See if you can get oil to work for you. Where are we now? It's 84.80. Dow seems to have been trying to hold this 23 highs right now. All right, 86, right. Okay. Yeah, we punched into 87 on Friday and then dropped, didn't we? Let's go back to oil a second. Let's go back to a 2-hour chart. This is my 2-hour chart. So here it's range to last month. So we got a big push on the 1st of April. We got a very nice move on Monday, 1st of April. And that buy signal took us from 82.40. And the end of that week, we were 500 pips higher. So if this can hold, yes, we crashed into 87. We actually gapped down beginning of this time last week, we gapped down. So that move up on Friday was just a backfill to this gap down. That's typically, and they overshot it. So if you see a market that gaps down, um, one of the things you could, that was shortable up there, that high. If you're long, if you bought these dips, then get out on completion of the gap and a return to resistance. So at the moment, this 83.9, well, we dipped into, oh, look at that, gone right back to that we've gone right back to this very early 1st of April support. Uh, yeah, 1st of April support. First early May, sorry, I'm confusing myself. 1st of May. So we from that break, we've gone right back. So we've done a big 1, 2. And if this is wave 3, if we can hold 85, close above 85, we could, I think we could go back to 88, 90 if we can hold this area here. But just be careful with the market that gaps down. That's all I'd say. I think if you're in 86, then that 87 target back end of the week was a good place to get out and stay clear into the weekend, and then watch out as the week unfolds. All right, I hope that helps. And I'll shout if I see anything as we get through today and it's tomorrow. Okay, have a good evening and see you.